Anybody been? Anybody been to one of these before that I facilitated? I recognize your face, yeah. We got one familiar face in here. All right, so this is the first of a 5-part little financial wellness workshop series we've developed. This one's gonna be a deep dive into financial institutions, like Cyrus said, so it's all about different types of financial institutions, how to get started, what to look for when you're looking to open up a bank account in your name. We're gonna do one about budgeting and saving in 2 weeks. 2 weeks after that, we're gonna go over credit. After that, we have one all about fraud, and then the last one we have is about kind of long-term financial planning and looking to the future. So hopefully I can see you guys at those as well. We've got a lot of good stuff coming up here on the books, but right now we are gonna start with the basics. So today we are going to cover the importance of having an institution, a financial institution relationship to begin with. We're gonna talk about the types of accounts, talk about how you can earn interest, all that goes into having a bank account open in your name, types of financial institutions that are out there, how you go about accessing your funds when you put it away into a bank account, writing a personal check. We're gonna talk about check systems, and then just a few tips on how you can maintain a good, healthy, long-standing financial institution relationship. As always, anybody, if you have any questions at all throughout the presentation, just shoot your hand up. I would rather answer your questions that you have as opposed to just getting through this. So I want to make sure that any questions you guys have throughout get answered. That goes for anybody who is virtual as well. We have a Q&A and chat function. If you have any questions, Sarah here can, relay them from the screen to me. So I just want to make sure any questions we have get answered.
Okay, so just leave it all over there.
There we go. All right, so first and foremost, the basics, why it's important to even have a bank account open to begin with. Obviously, it helps you save for emergencies and big purchases if you actually have an account that you can put the money into. Helps you practice responsible banking and budgeting, which I kind of alluded to. We're going to talk about that a little bit more 2 weeks from now. But if you have an actual paper trail of all of your money going in and out, you can budget a little bit more responsibly. Build credit to finance large purchases. So later on down the road, when you want to buy a car or anything of kind of a higher dollar value, you don't have to just pay out of pocket for those things. Rent a room or your own apartment. A lot of times when you are looking to rent a room or some kind of, housing in your name, they're gonna ask to look at bank statements just to make sure that the money that you say you have, you actually do have in your account. So to have valid, is that me, software update?
Yeah.
Okay. Actually, I'll go through this. Regardless.
Change that.
You're good. These are the trial and errors. I think it's right underneath. There you go. You left. But yeah, having a bank statement that's actual valid issue from the institution is gonna help you with your approval loss down the road. Obviously, buying your first car or buying your first home, those things are going to be virtually impossible to do just, with cash out of pocket. So all these things are why it's important to even have a relationship open to begin with. Does everybody here already have a bank account in their name, open and ready to go? Very cool. Anybody have a credit union bank account? You do. Anyone else? Just you? All right.
Yeah.
We're gonna talk about the difference here in a minute, but things to consider whenever you are choosing a financial institution is just what's most important to you. I know you guys all have bank accounts open right now, but probably sometime down the road, you're gonna need to open up another one for one reason or another. I myself, I have 4 bank accounts open. I have my first credit union account I opened, my current one with Patelco that I use as my main bank account. And then I have a Chase and a Capital One for their credit card options as well. So, not one financial institution is always going to be a one size fits all. You can open up multiples and use them all for different purposes. When you are looking for, the qualities or the benefits that any other financial institution might have, just some things to consider. Number one, what are the fees? I'm going to say right now, if you ever open up a bank account, just a regular checking account that has any kind of monthly maintenance fee or any fee just to have the account open, that is your first sign to run for the hills. Do not open those accounts That's the easiest fee to avoid, and you're not getting anything from it. You're just paying to have your money already open. Most don't do that, so if there is ever anything that's offering you that, it's a big no-no. What are the interest rates? We're gonna talk a little bit more about interest here in a second, but checking the interest rates both for loans or for savings accounts or whatever you plan on using an institution for is a hugely important thing to look at. How accessible is the institution? We're gonna talk about digital banks later, but they have different kinds of accessibility as large banks do, which have different accessibility as credit unions. Can you use a debit card or online banking? What products and services are offered? You know, some digital banks, again, don't offer everything. I know Capital One, for example, doesn't have a lot of actual branches, so just depending on what you're looking for that institution for, these are just questions to ask yourself. And last but not least, is my money safe? Do they have good federal insurance? What's their reputation like? These are all just questions to ask yourself when shopping around. All right, yeah,
So, can you go back?
of course.
So you said, when say you wanna open like a savings account and with the bank or the institution that you're trying to do that with is planning to do that. They
Don't, yeah, no, so, I mean, I can just speak from, like the telco standpoint, we don't charge any monthly fees or maintenance fees for any accounts that we offer. Most do not, so pretty much all credit unions aren't gonna charge you a fee just to have your account open. There are some accounts that will charge a fee for like extra perks or extra benefits. If that's something that is, you know, worth it to you, then by all means, that's a question that you have to, you know, ask yourself. But any account that will just charge you a maintenance fee for having the account open, that is super avoidable. Most institutions won't have that, so if you are currently with a bank account that charges you, you know, a $5, $10, whatever monthly service fee just to have the account, that is a good sign that you should maybe start to look elsewhere, because you're just, you know, giving money and not getting anything back in return. That answer your question? So obviously, the two main types of checking accounts, which I'm sure everybody in here already has, is you already have your accounts open, checking and savings. Checking, these are the ones for easy deposits and withdrawal. This is what your direct deposit will get linked to if you have that usually. It's linked to a debit card, so when you go out, swipe your card for purchases or get cash out of the ATM, it's all being routed through your checking account. You write checks, it's gonna come out of this checking account. This is just your main account for like everyday use. Savings is used for storing money. This is gonna have a little bit more limited access, so sometimes there's gonna be restrictions for how many times you can withdraw out of savings. Sometimes savings will not be accessible at the ATM. The main purpose of a savings account is to put money in there and watch it grow. You can have many different savings accounts for different types of purposes. Its main function is to separate it from your everyday fund. So for me, in my Patelco account, I have 3 savings. I have my emergency savings account fund that I put some money into, I have a vacation savings account fund, and I also have a house down payment savings account fund. I don't know if that's ever gonna go anywhere in the Bay Area. Yeah, what's up?
So like, I know there's like contracts for saving accounts that earn you like a certain amount of interest, right?
Yes.
So if it's like, let's say like some, like countries doing good or whatever, and then the interest rates are high, right?
Mhm.
When you put it in and you sign the contract, even when the Fed changes the interest rate, does your interest rate also stay up?
It depends on the type of account. So I think what you're talking about is a CD. CD stands for certificate of deposit. That is a type of savings account where it is a termed account. So it's like you put one mass deposit in or however much you're putting in at the beginning. You sign on the dotted line, it says for 5 years or 4 years or however long you're committing to putting that money away for, you are not gonna take the money out. And in that case, your rate is locked in. So if you sign it at 5% and then a year later, the feds drop the rates down to, you know, a fraction of what that was, your rate is still gonna be locked in for what you signed for at the time of signing. Now, at the end of that 4-year term, you're then refreshed. So if you roll it over to another one, it's whatever the rate is at that time. But you are at least locked in for what you have during that time. If you choose to take that money out early, it's called breaking the CDs. They normally charge you a penalty for that. It's sometimes 3 months worth of interest earned or 6 months or whatever, you know, the agreement is. But that money is all locked in. If you're in a liquid savings account, which means that you can deposit and withdraw whenever you want, those rates will fluctuate as the federal rates do, because you're not locked into anything, you're not committed to that. So you can, you know, your rate varies as the, I guess, liquidity or flexibility of the funds do. Answer your question?
Yeah.
Cool.
And one more thing, so
Yeah.
I understand that you can have multiple savings accounts in one institution.
Yeah, so I mean, a lot of different financial institutions will structure their accounts differently. The way Patelco does it and the way that from what I've seen, most credit unions or bank accounts do is that you'll have like one main bank account number. And then underneath that, you can have as many different like suffixes or sub accounts as you would like. So like with Patelco, for example, I have my account number. Within Patelco, I've got my emergency savings, house fund savings, vacation savings. I also do have a CD account with them because we had a special going not too long ago. And then I have 2 checking accounts as well. I have one for like my bills to go in and out of, and then my like one checking account. So you can structure it however you want, but they're mostly gonna be all under one account number. All right, let's talk about interest. So interest is just money or funds that are added on to either a loan balance or a deposit balance, and that's gonna be determined by an interest rate. So a rate can be fixed or variable, which is what I answered for your question earlier. Fixed rates mean they don't change, they're locked in, but normally your balance is locked in as well. Variable means as you pull your money in and out, the rate can also fluctuate as well. You earn interest on deposits and you pay interest on loans. So when you're looking to put money away, you want to look for higher rates to earn more money. And when you are borrowing, lower rates to obviously spend less on the balance that you borrow. However, typically savings accounts will earn, typically savings accounts are going to earn more than checking accounts, but normally a high rate on a savings account is still gonna be lower than what a low rate on a loan is gonna be. Unfortunately, borrowing money is just, you know, costs more than saving money earns does. The main reason for that is, you know, in order to continue to lend to people, the financial institution has to make some kind of money. That's why they charge interest to begin with. But you also do earn interest as you put money away. So what it can look like, a little visualization, if you borrow $10,000, which is, we're gonna call it the principal amount, that's the initial amount that you're borrowing. And that has a 15% annual interest rate, sometimes called an APY and APR, whatever. If you pay that loan off in 5 years, the total amount that you'll have paid with the interest that accrues is $14,273.96, which is over 42% of the principal amount. You can see on a little chart there how much it actually costs to borrow. It's another big reason why borrowing unnecessarily is not always the best move, because 10,000 can turn to 15,000 real quick. On the flip side, if you put $10,000 into a savings account that has a 3% annual interest rate, if the money sits in that account for 5 years, you will have earned almost $1,600 in free money. That's just money in your pocket that you don't have to pay back. You are accruing that based on you keeping the money in the bank. It's also why it's a good idea to utilize a savings account and actually put money in there that's gonna stay there. I used to do this when I was younger and wanted to save quickly. I would oversave, I would put more in my savings account than I could actually afford to save at that time. And then it would just end up coming right back out because I couldn't actually keep it there. So I wasn't really building any good, you know, strong savings habits, and I wasn't earning anything on my savings either. Even if you put a small amount in, whatever you can afford, $20, $50 per paycheck or per financial aid disbursement, whatever you're able to put in, don't be super aggressive with it. Don't try to set yourself up, you know, more than you actually can, because you're not gonna set yourself up for long-term success that way. Put in what you can afford to save and just slowly watch it build and grow over time. Alrighty, any questions so far? Yes.
Hi. So in terms of if you wanna save amount, I know you mentioned the saving, which are pretty cool. You wanna place a certain amount where you're not touching it, so it can increase in interest and so forth. would a CD be the best option for somebody or? what would
It
be-
depends on what you are, like, what you're, I guess, needing with that money, in the short term and the long term.
Yeah,
If you have, $5,000, 10,000, or whatever it is amount that you know for a fact you're not gonna need, you have other safety reserves in place, a CD is a great option because it is gonna have a higher interest rate. Typically like a liquid savings account, I'll again use Patelco for that. We have a liquid money market savings that is around 3%. Again, that rate can fluctuate. It's pretty locked in, but if anything does get slashed and that rate gets cut, yours are gonna get cut also because it's liquid. And then our CDs, we have promotions going on for 5.5%, whatever. So you are gonna earn more back on it, but you lose all accessibility to those funds. So my recommendation is just keep whatever you need for like emergency savings or things you'd wanna add to over time in a liquid savings account. Anything excess, you can put that into a CD.
is there a penalty if you were to break that?
There is, yeah, and that varies depending on your financial institution. Patelco, again, depending on the length of the term, is dependent on how much your penalty is. So I will say with Patelco, with most places, at least credit unions, if you put your money into a CD, it'll be principal protected, meaning you'll never lose more than you put in, like you'll always at least get that balance back. But with Patelco, like let's say you have a 3-year CD and after a year you break it, I think the penalty for that is 6 months worth of interest that you've earned is the penalty. So you get the 6 months back, but then we keep the other 6.
But is that a good way for you to, because I know with a lot of savings accounts, you wanna see some sort of benefit. I feel like when you're doing it traditionally in banks versus investing it into something, you're not really seeing an increasing benefit. So I'm trying to understand what would be a good option if you're just starting out, maybe you don't have that much.
Yeah.
Maybe you have $500 or $300.
So for a lower balance, I would not suggest putting it into a CD because something might happen, you wanna have some kind of accessibility for the funds in case of an emergency. We do have at the telco some high interest earning liquid savings accounts. We've got one money market that starts at 2% and there's no other like requirements needed with it. We also have a money markets plus account where if you have a checking account active with us, you get 3% on that. And you can add and take away from that as much as you want. This is another thing to consider. Like if you have a savings account that you want to be consistently putting money into, you can't do that with a CD. Or a CD is one set dollar amount and it's locked in for that whole time. So if you want flexibility, but still a decently high rate, then I would look at like liquid money market savings accounts.
So is the only benefit to having like a normal savings account, it's just that it's more liquid than something like a Roth?
Yeah, so a Roth is like an IRA, so that's a whole other, there's other tax implications and things like that as well. A regular savings account, the main benefit is that you do get the accessibility, so you can put money in and take money out. The trade-off is that the rate is gonna be a little bit lower.
Oh, and then, with the Roth, right, if you were to liquidate it before it's like set date, what's like the penalty for that?
So again, a Roth is like an individual retirement account. It's specifically an account you open up for like long-term retirement. So those are, if you take that out early, not only is there whatever like penalty the bank charges, there's also a penalty that the government charges for taking it out before retirement age. If we're talking about just a regular CD, the penalty for that will vary depending on what the bank account is. Usually it's just gonna be a percentage of the interest that you've earned at that point though. So usually if you put, $5,000 into a CD and then after 1 month decide you need to break it, they're not gonna take you below what you've initially put in. But usually what you will lose on it is a large chunk of the interest that you've earned.
Oh, and then with these type of with CDs, right, they're not using your money to like the bank, like, do all banks invest their money, or is it like?
Banks do, yes, credit unions do not. That's a really good segue, actually. We're gonna talk about that here in just a minute. But that is one of the big differences between banks and credit unions is what they do with the money that you put in there. So the main banking type is a really good segue, actually. Large banks, credit unions, and digital banks. Large banks offer pretty much all banking options. They usually have a large international reach. So for this, these are the Wells Fargo's, Chase's, B of A's, anything, under that Capital One is a large bank. Credit unions serve a specific demographic. They are member owned, not publicly traded, so you can't buy stock in a credit union. And they are not for profit. So these are Patelco's, Golden One, Travis, Navy Federal, Schools First. All those smaller ones are credit unions. They are typically based in a, facet of the community that they serve. Patelco, again, we're Northern California, so our reach is from San Jose up to like the Sacramento area. We have 37 branches in that region, but you do have to live or work in one of the counties that we serve in order to be eligible for membership. Navy Federal, you have to work for the Navy or be a family member to be eligible for that. So there is eligibility requirements for credit unions. They serve a demographic. It can be police, teachers, the community you live in, whatever.
Question?
Yeah.
Would being a student, be considered kind of working or not?
Say that again, I'm sorry.
For instance, you mentioned that in order to be able to have access to this, you either have to live in the community, the county, or work in the county.
Mhm.
So if you were a student, you don't live in the county?
If you were a student, I don't know. I think it'll probably be like an exception basis, but the county, Patelco is many counties, so it's like all of Solano County, all of Contra Costa,
Okay,
all of
got
San
it.
Francisco, all of Alameda. If you're anywhere in the entire county borders that we're in, you're eligible for membership. Yeah. And then digital banks, these are kind of newer. These are banks that have no physical locations. Normally will result in less cost, but also less accessibility. So this is Chime, Axos, Ally, Vero, Cash App is starting to dip their toes in the digital banking by doing like checking accounts. That's what a digital bank is. Questions on these?
You know how a lot of times, their information is being compromised? What does the credit union, how does a credit union, because it's serving the demographic
Mhm.
rather than a major Wells Fargo that you could see from the East Coast, it's all to the West Coast?
Yeah.
How does the credit union go about ensuring that the customer's information is not compromised?
So there's not much that any company can do to like prevent that. And I don't know if anyone's heard, but Patelco did have a data breach or some kind of ransomware attack earlier this summer. And that is just kind of par for the course these days. It can be anything from, a team member clicking a link in a phishing email that sends the information over to fraudsters. We're gonna talk about more of how that works in our fraud presentation later on. It can be, somebody inserts a USB in their computer and it has some kind of malware on it. So there's nothing that can be done really from any company to prevent those things because the, new security features are put in place and then the fraudsters come up with ways around them. It's always a game of cat and mouse between the companies and the people who are trying to fraud. I will say main banks or large banks are all insured by the FDIC. Credit unions are insured by the NCUA, which stands for National Credit Union Association. It's the same level of federal insurance. So $250,000 per social per like number that's on the account. You do have federal insurance for your actual funds. So if anything like worst case scenario happened, you'd be federally insured for the money that's in there. There's also like in our instance, in case anyone's personal information was compromised, we offered, free credit freezes for everybody who needed everything. So we do a lot with like the recovery side of things, but unfortunately fraud and data breaches are just sadly a part of life these days.
So, would you say that you did have a lot of money, right?
Mhm.
And you wanted it to be in a bunch of banks, but a lot of fraud starts to happen, right?
Yeah.
Would you say it's better to put like 250 in different banks?
If you have that much money, yes, you should diversify as much as you can because it's within the financial institution. And there's ways you can game the system a little bit. If you have added beneficiaries that can add additional levels of federal coverage, but you should not have any money in any single bank account that's going to exceed whatever level of federal insurance you have based on your balance. So if you have you and your 2 kids are beneficiaries on your account, I think for that you'd get up to 500,000 in federal insurance. If you have that, cool. Anything above what that institution is offering, don't keep any more than that in one place, because God forbid if anything were to happen big, Great Depression big, you want to be able to have some kind of, federal backing.
Um. I remember, I mean, I was unfortunately a Wells Fargo customer for 18 years. Wells Fargo started doing all the shady things that they were doing, and they particularly stumped on people that were either students or, in my case, disabled elders or both. Okay, short story short, somebody got into my account, robbed it, I mean, it was robbed electronically.
Mhm.
And so what Wells Fargo did was snatch my incoming check, saying, well, too bad, screwed up, when it was their screw up. 14 years later, after I had left Wells Fargo, and I wanted to ask a question about the accessibility with digital banks,
Mhm.
here they come sending me a check. Oh, yeah, we do it, here's your money back.
That tracks.
You know. No interest for all those years.
Yeah.
Nothing, you know, and I was wondering. There's nothing you can do about that.
There's nothing like you can do typically with the financial institution, that would be something you'd have to look to get some kind of like legal recourse or counsel on. But in situations like that, you know, the financial institutions are gonna do what they're gonna do, and that's one of the main reasons also why I do try to avoid large banks, because they are for-profit institutions, so they will find whatever they can in the fine print or any way they can to like get their money by any means necessary.
Right, so my question is, what does it mean when you say less accessibility with digital banks? Because I decided I didn't wanna see Wells Fargo or Bank of America chase any of them. I just.
Digital banks just don't have physical branch locations, so you're not able to actually go to like an Axos and talk to somebody face to face.
Right,
They don't have a lot of good like phone representatives either, it's pretty much all online, so. We'll talk about it here in a little bit, you're gonna get better rates because they pay less to keep things up and running, but you are not able to get as much human interaction with a digital bank.
oh, okay, so that's all the accessibility.
That's the main issue, yeah.
Alright, no worries, thank you.
With a digital bank, would it be harder to hack them because like, there's no, it's harder to find like a server room type?
I mean. I don't know how the mind of a hacker works, so like, I don't know what they do to go about doing things like that. Digital banks still have employees, they still have, you know, emails, and it really can be as easy as just a phishing email is sent to a team member and they click the link and, you know, depending on how the firewall is and what they have in that link, it can take things over, so I don't know if it would be easier or harder because the information is all in the cloud, whether it's us, whether it's Axos, whether it's Wells Fargo, whatever. And whatever the hackers are gonna do to get that information, they are gonna do. Alrighty, credit unions, so. The main difference between credit unions and any kind of actual bank is that credit unions are member owned and not for profit. So what that means is you can't buy stock in Patelco, we do not have investors, we don't have shareholders. We just keep enough money to keep the lights on, keep us paid, keep, you know, everything running, everything else goes back to our members, so. Because of that, we are gonna have lower rates and on loans and higher rates on savings accounts. And that's generally how credit unions are across the board. We are not looking to make any excess money, so whatever we charge in interest, we are using just to keep things running, to keep being able to lend to people. That's why our rates are gonna be lower on loans. The flip side of that is because we are not looking to make any extra money off interest on your deposits, we give you guys back higher rates on savings accounts. Typically for longer as well, a lot of big banks will reel people in with, you know, a really high rate on a billboard, on a flyer, but when you read the fine print, it's for the first year, then it goes down to, you know, 0 point nothing after that. We typically have a little bit more sustainable long-term high rates. NCUA insured, like they talked about earlier, and member and community focused. Someone also asked earlier about investing money. We are not in the stock market game at all, so we don't pay our stockholders, we also don't invest in anything outside of what would be used for Patelco. So we're not gonna be involved in any other kind of third-party enterprises. Generally speaking, your money will be a little bit more I don't want to use the word safe because the bottom line, they are insured either way, but your money is going to more trusted resources when you put it into a credit union versus when you put it into a bank and they can literally do whatever they want with the reserves that they have. Questions on this? Great. So digital banks, financial institutions that operate solely online and have no physical branch locations. Some examples here, Chime, Axos, Ally, and Vero. There are many more. Like I said earlier, other places that used to be just cash exchanging platforms like Cash App is starting to open up checking accounts and debit cards now. I think Venmo is starting as well. So it's definitely a growing industry. And there are pros and cons to using a digital bank. I wouldn't recommend it as your only place that you put money, but there are some benefits to them. Pros are they have good rates on deposits and loans. If they do offer a loan, it's gonna be a good rate. A lot of them don't. But because they are not paying employees to go into a branch, they're not paying to keep branches open, they have a lot less overhead in that regard. They are able to offer better rates on the products and services that they offer. You're also not gonna find a lot of service fees there. It's a pretty cost-effective way to do banking. Their online banking features are really, really good. I think pretty much across the board, I've heard nothing but good things about these digital banks and their online platforms because that is their market, so they have it pretty cornered. And as a result, you're gonna get really fast, convenient, quick online service, whether it be the app, whether it be, a lot of them have live chat functions. Anything online is gonna be really, really smooth with the digital bank. Flip side, less customer service and human contact. So if you ever do need to get someone on the phone, good luck to you. It is an uphill battle. They're not gonna offer as many products and services because they just don't have the capability to do things like that. A lot of times, like when you're doing a car loan, for example, you are gonna have to like sign documents, talk to people in person, because they don't have those functions available. They don't offer those products. Cash is less accessible. I think they are getting better at this, but for a while, if you wanted to get cash out with like an Axos debit card, for example, they don't have those ATMs anywhere, so you had to go to a Wells Fargo or a B of A or Chase and pay whatever fee they were gonna charge you to get the cash out. Smaller ATM networks, so you may have more ATM fees for those.
Does Patelco charge for AT&T?
That's a great question. Thank you for asking. We do not charge for ATM fees if you were using a Patelco ATM. If you use a Patelco debit card to get cash out at any kind of big bank like Chase or Bank of America or whatever fee they charge to use their ATM, that will be incurred. However, Patelco is part of what's called the Co-op Share Branch Network, which pretty much every other credit union in the country is a part of. It's actually the largest ATM network in the country, larger than any Wells Fargo or individual bank. So you can also use your Patelco ATM card at like a Golden One ATM or a Travis ATM. Any other credit union ATM, plus like 7-Eleven, you can use Costco, you can use it at, those are all free. So the ATM network that Patelco is in is the largest in the country of free transactions. And that goes anywhere, even outside of California. I'm from Ohio. My first credit union is Right Pat out in Dayton, Ohio. I can use my Patelco and my Right Pat interchangeably for free. All right, accessing funds. So there's obviously branch and ATM access if you need to get cash out. Debit cards linked to your checking account. Those are typically free with most financial institutions to use. You can write a personal check. They are becoming more obsolete. Has anybody in here written a personal check before, out of curiosity? Okay, we've got a few. I have to write it for my rent. I have a very old landlord, so I'm back in the habit of doing it now. Online banking access, so you can have easy transfers and money management. And then digital wallets such as Zelle, Venmo, Cash App, Apple Pay. Digital wallets and digital banking are different things. Digital wallets are just places where you can link your bank accounts to transfer money and to pay for things. A digital bank is an actual bank account that you can get your direct deposit or your money to put into. Some of these are becoming like both. Cash App is the one that's really kind of leading the charge on starting to offer debit cards and checking accounts as well, but these are just more so money management apps than actual banking apps.
Question.
Yeah.
Just to go back to the fee,
Mhm.
if you were traveling internationally,
Mhm.
is there something available, for instance, a credit card or something from Patelco that you could utilize?
We have our points rewards card, which I think is our like highest earning card that doesn't have any additional foreign transaction fees. But you do get just like whatever the conversion fee is. I actually don't know if there are no transaction fees or if they're just the lowest transaction fees. I will be honest though, Patelco does not have the best travel credit card. So if you are looking for a travel credit card, that's why I have my Capital One, because it gets you more points and there's, you also get access to the whatever lounges they have. And there's just a lot more cards out there that are better for those purposes.
Okay,
If you're here for the credit building one, we're talking more about credit cards at that point, but
okay,
you can use, different credit cards for different purposes. Patelco, if you're looking for a travel one, we are not the guys. I just want to be upfront with you guys about that. Low rates, things like that, we are. Travel, not us.
okay.
All right. Online banking, I'm sure all of you guys use online banking with your current bank accounts that you have. It's a secure digital way to view and manage your funds, gives you 24 access to your account. Believe it or not, back in the day before online banking, if you wanted to know your balance, you had to either keep a check register or like call. That's kind of how it was when I was first getting a bank account. Online banking was just on the rise. You can easily view your transaction history there. You can send and receive electronic transfers through Zelle or through whatever digital logs that you have. If you get a check, most of them have places where you can like take a picture of the front and back and deposit the check on your phone right there. Saves you a trip into the branch. Apply for new loans and accounts, pay bills, send messages for customer service. Pretty much anything you can do in person, you can also do online, just without an actual human being to talk to. So if anybody is not currently utilizing online banking for your existing bank account, I would definitely recommend getting it started. The options are endless that you can do on there. All right,
I haven't seen one of those in forever.
one of these, we're gonna talk about how to write a personal check here. So I saw a few hands have done this before.
Yeah.
You probably won't need to do this in your lifetime because they are becoming more obsolete, but if you ever do, I'm just gonna walk you through how to do it right now, real quick. So there are 5 points in a personal check that you need to fill out in order for the check to be able to be negotiated, which is what they call to, take it, cash it, deposit it, whatever you wanna do. Number 1 is the date. So if you're filling this out, with the date the check is written up there, it can be written out in full letters, it can be, 9/17/24, whatever today's date is. However you wanna put in there, as long as the date is fully written on there, you're good to go. Into the order of, this is the person the check is going to, so you put the payee's first name and the last name spelled out in clear English. If you are writing it to someone who goes by like a nickname or whatever, just write it to their name that will actually be on their bank account. Because some tellers or some people who are taking these checks are gonna be sticklers about things like that, so make sure it's written clearly, legibly, and what their actual name is. No initials, no first initial, nothing like that. 3 is gonna be the dollar amount written in numbers, so the numeric dollar amount. And then 4 is the legal line, so this is the dollar amount written out in actual English, $100 and 0 cents, 0 over 100, whatever. And then finally, number 5, this is where you will sign. This is your endorsement saying, yes, I do give this person this amount of money on this date. This memo is optional, so you don't have to put anything in there, but if you want to put a memo, lawn care, happy birthday, whatever it is, for your records or for theirs, doesn't need to be filled out, but some people like to do it down there. And then these numbers at the bottom are not just gonna be zeros on your actual checks. It will be, first is your routing number. So a routing number is just whatever the financial institution's routing number is. Everybody who banks with Patelco has the routing number 321076470. Everybody who banks with Wells Fargo will have the same routing number. Sometimes like wire transfers and international accounts will have different ones, but for the most part, the routing number is the same for everybody. The routing number just says it's coming from this bank account or this financial institution. The next chunk down here will be your individual account number. Your account number is what is specifically linked to your checking account or whatever account the check is being written from. This is the same with like direct deposit or making any kind of electronic payment, so this is important to know as well. I talked about with like Patelco, I have my account, and then under my account, I have 2 checking account numbers, 3 savings accounts, all that good stuff. Each one of those will have their own unique, like full 14-digit checking account number. That's what you're gonna have right here, so. If I'm writing a check, it's gonna be linked specifically to one of my 2 checking accounts. Each one has their own full 14-digit number that is corresponding with those checks. It'll be on the check. It's also like if I'm getting direct deposit into one checking account and not the other, you make sure you put the full one on there. So your member number or your account number and your specific checking account number are gonna be different. They'll normally have the same like member number within the checking account, but it has other numbers in the beginning and end to signify that it is this specific checking account and not just your membership as a whole. And then this last little bit is the check number. So every check has its own unique number. The next one's gonna be 1025, 2627, so on and so forth. So this is what a filled out check will look like when it's all said and done. Important, the day must include the day, month, and year, so you can't just say like September 2024, it's gotta have the full thing on it. Most personal checks will expire after 6 months. If a check does not have a set expiration date written on it, 6 months is the expiration. Some will say on there, this check expires after 90 days, some will say after 1 year. If it says something, then that is what you go by. If it says nothing, 6 months is the rule. And then banks will always use what's written on the legal line if it doesn't match the numeric line, so. If there's any discrepancy here, and they missed a digit or whatever in the number part. The bank will always go based on what's actually written out in English. So if you're ever writing a check, just make sure those 2 numbers match. But extra, make sure that the legal one matches. We've had people come in before with, you know, they write like. I don't know who's writing the check, how they misspell something, but sometimes it'll confusingly say like 10,000 when it's clearly only for 1,000 up here. You gotta make sure that that's actually what it says on that number there, because that's when they come from your account. Questions, checks?
Is there still a lag time between, well, there is, and this doesn't look at this, rhetorical question. But one of the things I noticed that with online banking, sometimes you will get, like, if you're getting a direct deposit from a federal or a state agency for money, SSI, disability, whatnot. As soon as the online bank knows that, I mean, they get whatever notation they get that
Yeah.
it's on the way, they will give you your money 2 or 3 days early, unless it's a weekend or a holiday, in which case they will not disperse. Checks, dear God, you know, somebody might sit on the check for a week before they deposit it, and then they'll take the bank however long it's gonna take them to process it, and what you have to balance your checkbook.
Yeah.
Because if you do not, everything will go to, you know, one
Yeah.
in the handbasket very, very quickly. So since those are becoming obsolete, is that still happening or is it worse?
It depends on the person and it depends on who, like, for the bank account itself, generally speaking, once you're like. If I wrote this check to you and you took it to the bank today and deposited it in your account, it would typically debit from my account within like 2 to 3 business days. They scan it, it goes to the back office people, they type the numbers, make sure everything's good, and then it, you know, is credited from my account electronically. What's rough is that like, my last landlord also only took checks, my roommate wrote those checks, so I didn't have to deal with it, but she would sometimes like deposit or give her the check for April and she wouldn't cash it till like June. And so, you know, you're sitting there like having to know that this money is gonna be coming out of my account at some point, but it hasn't come out yet. So it is very important to stay on top of money that's coming out of your account if you are writing checks, because they will not always come out right away, depends on when the person deposits.
Something that's more relevant to students. There are some organizations that if you get really lucky and you get a scholarship, they don't deal with the schools processing, the way they process it from the school, process it and put it in your account that you set up in the school. So you will have to get somebody's approval for them to send you a check directly, and then there's more lag time. I'm just speaking from these experience.
For getting an actual check.
Yeah, from getting an actual check and being able to actually process that check, if, like in a scholarship situation, you know, you get the notice for it, I mean, organization, hey, you got a scholarship,
That's
but
good,
it might be 3 weeks.
yeah.
And
But you have the notice.
they don't, the organization and the school.
Yeah.
They don't mesh,
Okay.
so.
Good to know, yeah. And it's, I mean, a direct deposit is basically the exact same thing as a check, it's just done electronically, so whenever you're. Signing up for any kind of direct deposit or you're paying someone electronically from your account, you use the exact same information that's on here. You put in your routing number, your full account number, and it processes on the back end the exact same way a check does. The same people who are debiting checks in your account are debiting those things as well, it's just you don't have the actual paper to go with it.
We do have another question in the chat. They asked if they're renting a room, would it be better to pay cash or write out a check to make history?
You write out a check to make history for sure, yeah, you don't, anything that's like, legally binding like that, you want some kind of paper trail for, because there's nothing preventing a landlord or someone to be like, you never paid me, you know?
Thank you.
Of course. All right, so without a relationship with any kind of financial institution, people might face challenges. You do not have federal insurance, so if you keep all your money under your mattress and something happens to your house, there's no recourse for you there. If you're paying cash, like a great question there, you're not having any kind of paper trail or proof of the money that you paid. There's no way for you to easily monitor your funds and your spending. You're not earning interest. You can't access your funds as diversely as you could if you had an actual bank account. And there's no way for you to deposit checks. So if you get a check and you don't have a bank account, you gotta take it to a check cashing place, and those are just out to take money off of your checks and your money. Alrighty. So, everyone know what a credit score is here? Yeah, credit score is just like a report card or basically a overview of your borrowing history. Check systems is that, but for bank account information. So I think this will probably be the last thing that we cover today. This is the last important thing I have here. But Check Systems is a nationwide consumer reporting agency where banks contribute information about their customers' checking and savings account activities. So what that means is, whereas a credit report, if you are late making your payments or charge off credit cards or don't pay things at all, they report that to the credit bureaus. For this, if you have a bank account where you repeatedly overdraw the account, or you are caught doing any kind of fraud on the account, or you're bouncing checks, writing bad checks, whatever, all that kind of behavior is stuff that can be reported to the Check Systems Agency, and your check system score will drop as a result. It's used by most financial institutions to screen new account applicants. So like with Patelco, when you go to open up your account, we don't run a credit check, we don't do any kind of soft pull on your credit or anything like that. We do a check systems pull, so we'll see whatever your score is there. It's between 100 and 899. Obviously 100 is like the worst you can be, 899 is you're perfect. Most of the times, anything like 600 and above, you're gonna be pretty good to go. Attaining an 899 check system score is impossible. I've never seen it. I think mine is in the like mid 700s, and that is also considered for any university to be a great check system score. There's lots of factors that go into calculating this. I don't know all of them. Age, like length of time you've had bank accounts open, go into it. Diverse types of accounts, all that kind of stuff are things that credit towards your check system score. So you can be someone who has never overdrawn a day in your life, never written a bad check, never done anything, bad bank account wise. you're still not gonna have an $8.99, but as long as you are, above 550, 600, you're gonna be in good shape. Check systems records go back 5 years, so any activity you've had in the last 5 years is gonna reflect on this. And like we said earlier, overdrawing accounts, writing bad checks, ATM, debit card misuse are all things that can all hurt your check system's score. These are just some tips for yes.
Maybe just ask a question, when it says like, the record goes back 5 years,
Mhm.
does it mean like after 5 years of, all the record, it like start over again?
So like if you overdraw your account or you get like an NSFE or something today, 5 years from now, that instance will no longer show up on your record anymore. It falls off, those things fall off for 5 years. Now, if you have like, let's say you open up a bank account with Patelco, you overdraw it like $500 and then you never pay it back. That's gonna stay on there indefinitely because every month it's gonna be reporting as a new ding, like a new, you still have that $500 as a negative balance, so it's active, it never goes away. If you have a $500 negative balance with Patelco for 3 years and then you pay it off, from that point onward, after 5 years, it falls off. Does that make sense?
Yes, it just says for the negative.
It's for negative, it's for any kind of like account misuse, as long as it's a one-time thing or if it's all handled from the time that whatever negative activity is resolved. 5 years after that is when it falls off.
And for the positive credit, like how many, it is like, there is no like years with a check back.
For credit scores,
Yeah, I mean,
same thing. So credit scores, I believe, it depends on what it is. So like with a credit score, it's like a type of bankruptcy will fall off after 13 years, another type will fall off after 10, a negative payment will fall off after 7. So there's different levels to that. But pretty much any credit reporting or kind of reporting thing like that does have an end date, I guess. Yeah. That's all I got for you guys. Yeah.
Sure, my question is, if I apply for a loan
Mhm.
and then I lost my job, I couldn't pay back, does that affect my credit, cycle score?
Yeah, so if you apply for a loan and you've, entered an agreement where you're gonna pay however much each month and you lose your job or whatever happens where you can't afford to pay that back and you just don't pay it back, that will still negatively impact your credit score. Most financial institutions are not heartless, so if you lose your job and you go to them and you say like, hey, I'm experiencing this financial hardship, I need some time. Patelco, we will offer you normally a deferment. Sometimes we can say, okay, you're good for the next 90 days or 3 months or whatever. Come back to us after that point if you still are out of work and we'll work out something there. I've heard Wells Fargo's gotten better since everything's come to light with them, but back in the day, they were straight up just saying like, too bad. So it really depends on the bank account, but definitely if that ever happens, let them know before you miss the payment, because if you tell them ahead of time, they will work with you to make sure that you're not going negative.
that's a very interesting, so, it works the same with, credit cards?
Yeah, it works the same with any kind of, and again, I can't speak for all financial institutions, I can just tell you what we do at Patelco and what most credit unions will do. Whereas if you're facing any kind of financial hardship and you are in the middle of a loan commitment, if you talk to somebody at the institution and Account Solutions or whatever, they will work out either some kind of deferment plan where, like with a credit card or a loan, you'll still be charged interest, but you're not paying anything for 90 days or however long you need. They can do skip payments for free, they can work out forbearance plans for you. They can work with you to make sure that it's not gonna negatively impact your credit. You just have to let them know, you can't just not pay.
And but they don't let you use your credit card, or you are able to still use it?
Again, it depends on the situation. I think if your credit card up to that point has been, good and healthy and active, you should still be able to still use it, provided you're still spending within your limit. Yeah. Sorry about that there. This is all I have for you. The rest is just stuff that we offer. If you have questions about Patelco or anything that we can offer you, products and service wise, you can come and talk to me before you guys leave today. We have a QR code here. right there, I didn't finish this, I just realized that presenter. But if you have this QR code here, that is a like post presentation survey, if you guys could all take just like a minute or two to fill this out, it's super quick. It would help Syra and Lissette and myself out quite a bit. Any other questions before we wrap things up today?
I can switch to the progress page.
Oh, yeah, does everyone have this? We're good, switch to this page here?
Yeah, it's like.
Yeah. So this is our virtual branch. I also didn't put Berkeley's information in there, but we have a branch that's right, like a 3-minute walk down the street. It's our Berkeley branch. So if anybody is interested in Patelco's products or services or has any other questions, feel free to come talk to me. I can send your information over to Martin. He's the branch manager over there. He's a great guy. And they can get things going for you. We've also got this virtual branch right here where everything can be done online as well. You can be face to face with the Patelco representative over Zoom. Yeah. That's all I got for you guys today. Thank you for coming.
Thank you.
I will be here. I'll be here not next Tuesday, but the Tuesday after, going over budgeting and saving strategies and techniques and whatnot. So if you are around for that, I would love to see you guys again. 2 Tuesdays from now.
Thursday.